recording is on. Let's dive in. What are you guys thinking about indices today while I'm looking at it? And let me change that dealing range actually. Is he going to deliver before 10 a.m.? Yeah, I think so too. Either move up and break highs or we chop around and create more buy side. Judas had opening up and down. That's what I think as well. Like literally Judas up, then low resistance liquidity run into 900 level south side. So I'm thinking like yesterday's draw could be a turtle soup, and then south side delivery, then starts chopping for the entire day. Because like if you think about it, what happened here is basically, so yesterday's draw is this high, right? The consolidation. And if you take a look at on the hourly, on the 15-minute actually, it's rejecting at the CE. So yesterday's high of the day, this high is an engineered liquidity, right? And the actual drawn liquidity should be an easy target. Now, before close, we had a 3 dry pattern here. So the buy side 3 times, then sold off into a rejection block here, which is what we expect, right? Like when you see an engineered liquidity, you should anticipate 2 things: either coming back down into discount and rally, or take out some sell side, which it did. These sell sides here and the one below right there. So that rejection block caused a change in the sentiment of the market. So we have a structural shift there. This one is a first stage accumulation. That's how I see this. That's the first stage accumulation. Now we are in the second stage reaccumulation for that buy side target, in my opinion. And the fact that these lows over here got swept makes me thinking we're not gonna have a just swing to the downside one more time. If it does so, which I don't think it will, I'll be looking at like PDRA's below range EQ, or maybe like this rejection block could be targeted at open immediately, and then starts rallying higher into 18,064 level. And going into afternoon or maybe silver bullet, I want to see like a turtle soup sell off. Up and down with news. Yeah. I wonder how 10 a.m. delivery, news delivery will be. If we can get a fair value gap before 10 a.m., it could wick into that fair value gap with 10 a.m. news release. Take a look at ES. second. Because essentially, I believe Nasdaq's actual drawn liquidity, like in the intermediate time, I think it's this low right here. That's also because we have a gap right below it. If I move, so that gap is the target. It's going to be the low resistance liquidity run target in my opinion. So once we sweep the high, the buy side here, should be a low resistance liquidity run into the RTH gap, and then we'll see what happens from there on. Cool. Let me take a look at ES. Actually, let's take a look at the hourly chart. So yeah, I would definitely expect the hourly fair value gap here, which is also BPR. This level must hold no matter what. Like we can see it just swing into there and done buy side also. I'm gonna be aware of that level and the rejection block. Let's take a look at ES. Oh, ES definitely wants lower and waiting for Nasdaq. It seems like. Yeah, maybe this high as a strong liquidity with Nasdaq's run. Could be a potential strong liquidity on ES. I wouldn't like to see it going further though. Draw the young range as well. Yeah, this looks like second stage reaccumulation for ES as well. So this is the first stage, trading into the fair value gap, rally higher, consolidation, then comes back down. This is not a market structure shift, this is just a pullback. Now we are at second stage reaccumulation, it seems like, for the buy side target. Once it's tagged out, we're gonna also have an SMT divergence, I believe, at that high. Let's see. Oh yeah, definitely. Definitely. If Nasdaq could run the highs here, that's gonna be a bearish SMT divergence. Then we could expect a lower resistance liquidity run. Today, after the session, might be eventful. You know. Alright, it's 4 minutes to market open. Let's see what happens there. I'm definitely not placing any trades before 10 a.m., that's for sure. And preferably, I don't want to see it delivering before silver bullet. I want to see market to use the news, that data release, to get to draw on liquidity, because that's a high resistance liquidity run target, right? So high resistance objective. I want to see it using that news data, rallying the buy side, then maybe this order block here. Maybe this order block at the highs, or little tiny BPR there, could be the short POI. I'm definitely not going to be targeting those levels though. I would rather look for short sells there. We are also trading in the daily fair value gap. Just a side note. Is there any other specific technical reason to not choose the last hourly down leg as dealing range? Let me take a look at it. You mean this one? The low at midnight? Good morning, Kilo. Last 1 hour bearish leg, man. Okay, you're talking about this one, right? Just correct me if I'm wrong. Yeah, because the reason you don't want to take that as a dealing range is because this leg is not it's not attacking any liquidity. So what you want to see is if it took the sell side here before turning, then what I would do is using that low as my dealing range to this high. Same deal at the highs here. It did not engage with the liquidity pool, so you want to wait for that for the dealing ranges. Cool, cool, cool. Sweep at bottom, both extremes, yeah. I mean, typical high resistance liquidity round condition. Like this is technically seek and destroy. Rejection at CE, generating liquidity. Here, same deal. Rejection at CE, rejection block, generating more liquidity at the bottom. So this is technically an accumulation phase. You could expect a manipulation above the highs and then rally lower. Take out these sell side to generate liquidity, and then use both sides of the liquidity to go lower a bit further at around this level, in my opinion. Okay, market open. Let's see what's going on. Hey Thor, if that's the case, why wouldn't you use the last high on the 60-minute? Just curious. Like the all-time high in this one. The reason I'm not using that is because I think, or I believe, market is not targeting that high. So to increase the probabilities, I'm using the market maker buy models dealing range and using that range equilibrium. You could do that though, it doesn't make much difference. Because the actual dealing range is, like you mentioned, it's from this high to this low. But for the intraday purposes, I'm using the market maker models dealing range. All right, let me. Adjusting my charts real quick here, guys. All right, cool, cool. I've been in long since we topped 830 fair value gap on the 5-minute. See, we traded into the hourly fair value. I got one more time here. It's a 5 minute BPR. Great reaction so far. Yeah, I take that 5 minute BPR. Yes, still wants lower though. They're not in sync at the moment. Do you ever evaluate to use market maker model dealing range, which one of its extreme has just rebalance internal liquidity instead of sweep external liquidity? If yes, in which specific scenario? I mean, the thing is, I don't see the market as internal external liquidity. Um, oh, yeah, I gotta think about that question. Actually, that's a great question. Let me note that 1 second. As by the way, if you were not in the class yesterday, I would highly recommend watching the recording. I'm talking about high resistance and low resistance liquidity runs, which is very important. Just make sure to watch it later on when you have time. Here's an SMT divergence, bearish SMT divergence at these highs here. Just notice that. I don't think it's gonna long live, but definitely causing some sweeps at the lows on ES. rather have Nasdaq staying above the sell side. Rejection block. Oh yeah, at that range equilibrium right there. It's reacting as of now. But like I said, I would rather have Nasdaq staying above the low because it already swept before market open. So here, it already attacked the south side. Nope. Interesting open today. Is there any reason you didn't use this as the market maker buy model, or just because the one from yesterday was completed? I go to the 15-minute. Take a look at it. Doesn't look like an horizontal consolidation to me on the 15, maybe on 5. Yeah, got high here. Didn't attack though. Interesting. But for your question, the reason I'm using the other one from yesterday is because of the engineered liquidity. So if it wants to run these highs, the actual drawn liquidity will be yesterday's high. So it's going to use these highs as a fill to get up there. By yesterday's high resistance liquidity run definition is today we have the likelihood of price consolidating after probably taking previous day's high. Not necessarily, but if it wants to run the all-time high, it's going to be in the form of a high resistance liquidity run. Yes. Wow, this open is nasty. I mean, I don't see price coming back up into the buy side draw on liquidity as of now. It's not likely. Definitely going for, what is this? 922 level. I'm not interested in taking any positions before 10 now. Like, I couldn't care less if it runs the sell side right now. No impulsive moves here. But if I could get an entry like somewhere here or slightly above maybe at this at premium at 10 a.m. I could use that to go short and target the sell side here. 65 is pretty generous. So in hindsight, the drop from 7:30 to 8:15, initially I thought that was the pullback, right? But apparently it is the manipulation. It is the actual move. Price came back up into BPR and sold off, created a SMT divergence. I mean, regardless, I wouldn't execute on that just because we have 10 a.m. news, but it's good to see. I can delete those things now. I wonder if it completed any market maker buy models though, like on any time frame. No, I don't see it. So far, today's game plan will be I want to target the draw on liquidity on the downside, this original consolidation, also the gap. So if I could get an entry like somewhere here after 10, I would target the sell side and leave runners to the downside, the other sell side target. That is the game plan so far. Because I don't think 10 a.m. news will just send it to higher, send this to higher. Um, I don't know. Anything can happen with red folders. I just doubt that though. So essentially, the idea is I want to use this range, like that area, approximately, for short entries. Thanks. Just wasn't sure if it was completely wrong about that. It's not wrong at all. No. Low resistance liquidity run to 17.8. Yeah, it seems like it is. Good morning, Fabio. Big gap too. Exactly, that's what I'm thinking. How you doing? I'm good. Had my coffee, chilling with the fam, enjoying the sell-off. Yep. If you look at 2:30 p.m. Monday high in 15 minute and trace CE of it, you'll see that we reacted engineer liquidity here. Let me see. Let me take a look. 2:30. Oh yeah, it seems like so. Yep. Maybe this one actually would be cleaner. Yeah. And that's an order block as well. Um, 12:30 candle is an order block. All right. We go back to 5. Yeah, I mean, I would rather have price staying at around this level at 10 a.m. Take a look at the dealing range here on the one. Same thing, like it's the premium of the range of the last swing. Tesla being nice again. Let's see. Tesla was up good with pre-market. Oh wow, nice. 3% on the day. Beautiful. Seems like in March it's gonna be like running very fast. There's S&T at the lows in 1 minute. We took 15-minute low inside of fair value gap and discount. Take a look at it. S&T at the lows. What time? I don't see it. Gotta reply to this. 1 minute between ES and Nasdaq. I don't see the bullish S&T divergence on the 1 minute. Let's take a look at the risk here. Here's the thing though. Yeah, short term. Yeah, could be short term bullish S&T divergence. It should be like that should be ripped rather quickly though. I wouldn't rely on that. It's just gonna cause a pullback probably, and that's it. I would rather have a S&T divergence, something like this, with that actual swing low, something like that. So what I'm thinking is this was the low risk bar, low risk sell. Now you're setting the stage for the first stage distribution for the sell side target. 922 on Nasdaq. Let's look at ES gap. Let's mark that out. want to be aware of that low as well on ES, and that looks like a consolidation also. Probably on the 5 minute it looks better here. Which is 5,052.25 on ES. We're trading in a 5 minute fair value gap right now. I think the 10 a.m. short would be great and target the PTL. 15 minutes smooth edge on EL, not clean PA. It is, yeah, it looks clean, but in terms of risk, it is not the best conditions for risk management purposes. I wonder how many people just got stopped here using this fair value gap. Alright, 5 minute IOFED, fair value gap just tapped here with that wick. That's interesting. Sure. Don't tell me you want to see a long. Oh, you DM'd me. Okay, let me see 1 second. Wait, hold on. I'll take a look at it after I read this. What is confusing me to get short is that 2:15 fair value gap is being respected in 5:15 minute, 2 a.m. Yeah, that's what I just saw as well. 2:15 here. It's definitely tricky. They could use the 10 a.m. news to run the highs as well. That's what makes this as a tricky position here. Tricky price action. We'll see what happens at 10 though. Because remember what I told you guys yesterday when I was talking about high resistance liquidity run. Now the buy side objectives are high resistance objectives, right? And price will use data news release, red folder to be specific to run those highs in the high resistance conditions. And today might be the case, just because we have 10 a.m. red folder. We'll see. I mean, I'm not going to be short unless I get a lower time frame confirmation. News gives some needed information. Exactly. Oh, where's your chart, Fabio? Where's your chart? Where's your take? Didn't you say you want to hear? Yeah. Yeah, it's a massive wick. See how it closes. But another thing is like on the hourly, we're still in a range. So like it's not going one side or the other. 1 minute till news. Let's see how it goes. Gun to my head though, I would go short. Alright, that's the level I mentioned. That I would like to. I would like to like find a short entry at around those that level. See how it goes. So the range equilibrium. 5 seconds till range EQ. Let's see what happens here. Hourly candle closes ugly. I can't believe I only used trade ES. Makes me sick. I did the same thing. And people ask me why am I not looking at the XY? When I tell them I don't look at it, they're like, oh, "How could you?" Yeah, the fair value gap was respected quite handsomely. Just IFPD fair value gap. Going to 5 minutes. Look at ES on 5 though. Looks very weak as of now. Respecting the order block though, a propulsion block and breaker on the hourly. Let's see. See if this fair value gap does something. Trying to get more information, more conviction for one side or the other. Like trying to find a reason to execute either long or short or whatever the case is. I don't know. I mean, the fact that we are trading above this range here doesn't look good for shorts as of now. see how this goes. Trading into fair value gap right there. I'm not convinced to go long here, to be honest with you guys. Are you, Fabio? What do you think? Are you convinced to go long here? Yeah, that's smart. Hmm. Yeah, that's smart. I like that. Like looking at the hourly chart, it tells me that price wants to rate the buy side. And I'm looking at the 15-minute order flow looks bearish, and we're in a bearish fair value gap. Then I'm looking at the 5-minute, same deal. The thing is, personally, what I would like to see is this earlier. There is a bearish SMT. I would like to see that getting faded first, but then if I wait for that, I'm not getting the reward I would usually seek. So it's tricky here. Yeah, yeah. The thing is with continuation here, potential continuation, it's high resistance continuation. So that's the problem. Running the highs over there, it's high resistance. Liquidator run. Yeah, yeah. Damn, it's nasty. Huh? What? I can see the chart. How come? Alright. Discord is undefeated, right? How about now? How about now, guys? Yeah? Sorry about that inconvenience. So someone mentioned this BPR here. Let's see what happens there. Wait, what happened there? Wow, that is very ugly. That is very ugly. No, like fading the fair value up there and now rallying, not so clean in my opinion. It's just stuck in the hourly fair value gap right now. But look at ES, dude. Look at ES on the same time frame. I feel like it might just sweep the sell side first on ES before anything else. I don't know. Like again, gun to my head, I would like target the sell side instead of going for the buys, because the buys will be high resistance to clear on. On the other hand, the sell side delivery should be low resistance to clear on. On the realistic point of view, you should be flat as of now. True. Yeah, I was talking about that as well. Like, I would rather see the buy side drawn liquidity being used as a turtle soup. Which one? On the 1 minute? Yeah. The highs from 7:30. Yeah, I agree. And also the original consolidation on the 15 minute is also on the buy side. But like I would like to see it like picking up the pace here. Otherwise, I don't know. Yeah, the Matrix has a really great point about that. Good thing previous day high and low are still there, guys. Just waiting for one side sweep. Exactly. We're in the middle of the range right now. Exactly. Like if you execute here right now, we're also at the range equilibrium, right? Whether it'll be a short or a long, the chances are it'll be chopped regardless of the move. Let's see how 15-minute closes. 15 minutes actually looks really interesting if you compare Nasdaq and ES. Nasdaq is making a down close candle. I believe it'll sweep the sell side. It seems like. Oh, low bullish SMT here. Look for longs. So ES on the 1 minute came into the rejection block. Very good reaction actually there. This is the price action where accounts get blown out. I feel like a giant weekly point power of 3 taking place, tight range accumulation some manipulation. Tomorrow maybe, and then heavy distribution possible. Take a look at the daily. So like a tiny rejection block there as well. Yeah, I mean, there's no point to be in a trade at the moment. If the 15-minute FVG holds, we should take the sell side. Here's the thing though, if that holds, that means ES will run the sell side, whereas Nasdaq will stall somewhere here in this range, unless it picks up. Like it should be a fast delivery for that to happen for Nasdaq. Take a look at the 4 hour. Yes, do you see this range on the 4 hour? Technically speaking, so technically speaking, what we shouldn't do is we shouldn't trade as long as price stays in this range. We should wait for either break to the upside or to the downside before creating a bias or before putting a trade on. Let's take a look at this. I mean, I would prefer the sell side here, like until it moves though. It's just like tiny. Let's see. some stuff is going on. It seems like ES just broke out, and Nasdaq just broke out. ES has to catch up. Otherwise, this SMT will cause a down move again. See if you can leave a fair value gap here. Risk reward not good for longs here either way. Exactly. What's the reward here? Actually, 55, not bad. Alright, now the bearish SMT is about to get faded here. IFED. Yes, still needs to catch up with Nasdaq here. Risk 15 apples. I would rather consider the lower fair value gap if I want to go along here, just because using the higher fair value gap, the risk will be way too much for my liking, personally. But if you can handle like 25 handle stop loss, or maybe like, yeah. Take a look at the CE of this. So. And we still have SMT divergence here. I I want ES to catch up with Nasdaq pretty fastly in here. ES is really bad. It's really weak. On the 5 minute, it's still wicking into higher fair value gap, upper fair value gap. And now we have a 1 minute SMT divergence. And left equal lows also. The thing is, if this wants to run the drawn liquidity, buy side drawn liquidity, it shouldn't really trade below this range anymore. Here. If it does so, the chances are against the buyers here. Have SMT with the 920. These are the conditions that I don't want to be participating in. Like, I can see this running the draw on liquidity here, but personally, it's not worth the risk for me because too much going on here. First of all, I would be longing into a bearish SMT divergence. I don't like to do that. Secondly, ES is still respecting its CB. So what could happen here is basically ES just accumulates in that fair value gap. Nasdaq runs the high and just sells off in a low resistance liquidity run manner. Why is it worth the risk? In my opinion, it's not. You see, it's coming back into the range again. That's not good. This is just it's just indicating me that the move, if it wants to run the highs, is weak. It's not a strong not a strong price action here for the buyers. There's a little breaker there also. I just noticed here. We are in it right now. I'll only take an entry if a bearish SMT and setup is exactly. I'm loving your setups, by the way. Very clean, fast moving market, right? You look for the SMT and the first inversion pair value gap or BPR, you short it. I'm loving it. Reaction to the EQ was something I never used to pay attention to. Yeah, you always got to be mindful about the equilibrium of the ranges because otherwise you wouldn't know if it's a pullback or an expansion. Without that information, you don't have a framework. Now, to me, this makes a high at the buy side drawn liquidity as a low probability target as of now, just because we are back in the range. If I was long, this is where I would get either stopped or collapse my position. Now the breaker is also gone there. Let's see this fair value gap here. Let's see what happens there. So 15-minute candle closes in 1 minute. I would wait for that first. See how it reacts here and how it closes. If it closes above, it's gone. If it closes below it or below CE, it'll be better. Oh, now ES is picking up. Wow. Okay. Wow, ES is really sending at the moment. And every fair value gap is violated. It's just not worth trying to trade, in my opinion. 100% agreed. Violated, violated, violated. Now this one's violated. I agree 100%. As of now, though, by looking at ES also, it looks like something like this for me. Like here. See, look, little tiny fair value gap on the 5. Yes, traded into 1 minute fair value gap. This should really send it now. I actually love these days. If you're showing up on like days like this, it teaches you how to be patient, and that's a skill set you should be mastering. Without days like this, you're not practicing patience. Patience is a virtue. Exactly. Like, I'm really curious. Fabio probably would have an answer to this. Like, I'm curious how many people just breach their accounts just today in this price action here, in this price action there, and this one. I'm sure it's a big number, a big figure. Tickets. There you go. Yeah. You should be telling us like, guys, this is a high ticket day. Don't trade. I'm getting a lot of complaints. Wait, which one are you talking about? Here? Hey, what about that? Oh, I see what you're saying. Okay, yeah, yeah, yeah. It's also because there's an SMT here on the 1 minute as well. But preferably, if this was a high probability day, what would have happened is this range, once it breaks out of that range, it wouldn't have come down into the range. Monday? It is Tuesday, buddy. I think I'm gonna call it a day here. This PA is ass. I'm sure when I leave, we'll get a beautiful move. I feel the same way. Sometimes I work on movie sets or TV shows and stuff. Whenever I have a call on a set, price starts moving on those days. Like I'm talking like 300 handles on Nasdaq or like 400 handles on Nasdaq whenever I get a fucking call to set. Exactly. Yeah, yeah, yeah. I'm literally like warning people. It's so funny. I'm warning people, guys, tomorrow I'll be on set, so expect a high volatility today. You know what we should do? You should take over these streams. So I should be on sets every day. Yeah. I'm really expecting volatility in the afternoon though, because looking at the 4 hour, the next 4 hour candle will open at 2 o'clock, which is the PM session silver bullet. It might move better in that time window. Yeah, yeah. I think yeah, that'll be probably 11 a.m. hourly candle. So also, guys, someone was asking me. Um, Let me see if I can find an example. Like how do you anticipate a low probability day or whatever? I mentioned 3 points when it comes to like anticipating that personally. Like first of all, I anticipate high resistance liquidity runs or low resistance liquidity runs, which was covered in the class yesterday. If you haven't watched it, you should. That's an important topic, in my opinion. And second way to do it is, let me pull up what I wrote there. Here, I believe. All right. So the second way is I look at the market, the intermarket, like ES and Nasdaq, for example, If they're not in alignment in sync, that also indicates low probability days, low probability conditions. And the third way is I look at the intraday price action, right? Whenever I see three consecutive candles printing like this one on ES, so if you look at, let me delete everything there so you can see it better. So like this, one candle in a range, second candle, third candle, now we're on the fourth candle, right? This is my last resort for anticipating low probability conditions. Let's say if I'm in a trade in this price action, whenever I see this kind of candles printing, I either collapse my trade or put my stop loss at break even if I could, and I wait for the range to get violated, one direction or the other, before doing anything else. It's a general rule of thumb though, like three consecutive candles or four consecutive candles on any time frame about 5 minutes could be a sign for you as well, for or low probability conditions. Mark the sell side of ES here. While we are waiting for this price action, I'm gonna make coffee for myself real quick, guys. Be right back. Recent. I am back. Let's see what's going on here. We have a little movement here. That's nice. So we have a breaker here now. I would love to see price respecting the breaker. And ES shouldn't really trade below the down close candle here or block once it confirms it. It's not confirmed yet, but I'm gonna just annotate it. Bullish 1 minute SMT. Let me see. So I believe, yeah, equal lows just got swept. SMT divergence at the lows there. Here. What's the risk here? Let me see. 50. The order block is not confirmed, so I'm going to delete that. I'll put it back once it's confirmed. This is the unicorn model. Breaker plus fair value gap. I would love to see very sensitive or like very good reaction in this fair value gap plus breaker. But I want to see the candle close within the breaker. Yes. There's that breaker there. Let's take a look at this short-term medium range here. What I want to see is, so I'm going to speculate around 11 o'clock hourly candle. I want to see something like, make it a bit cleaner. I want to see something like this at 11 o'clock open. So price stays around this level at breaker level, fair value gap a bit. At 11 open, I want to see candle opens in that fair value gap, trades down into hourly BPR and rallies. That's what I would love to see for 11 o'clock. Now. We are still in 15 minutes CB for the last hour. Yes, giving a good reaction. So there is a discount fair value gap in the short-term dealing range, which is from this high to this low actually, here. If it wants to target equal highs, it should respect the discount fair value gap right there. 8 handles stop loss. 62 handles over there. If I want to enter at this point in a long position, I would rather be waiting for 11 a.m. Hourly candle manipulation, and I would rather buy that manipulation instead of buying right now. Okay. Let's see what we'll get here in a minute. And I'm going to speculate around that candle open. So we have two things here. If I want to go long, I would either look for this rejection block as the manipulation in the new hourly candle, or I would rather want to see a turtle soup this low, creating a new SMT divergence, short-term SMT divergence with a yes. I would rather buy that. Now this is a new open, candle open, 11 a.m. open. Let's see. I would rather be a buyer below it. rejection block is being tested. Risk there. 15-minute count if your fair value gap is violated. That's a good sign. And the hourly 5-minute. Okay. Let's see if it could just turtle soup the low at the discount fair value gap. I want to see 1 minute power 3 if we want to go higher after 11 o'clock. Yeah, same here. Although hourly chart is kind of in consolidation here, like 3 candles, ranging. Yes, also had a reaction there at the rejection block and breaker. To be in premium off higher time frame market maker buy model, something that you take into consideration as a low probability setup in this kind of possible long scenario. Yes, that's also because buy side targets right now are high resistance targets, meaning it needs to knock out a lot of price action here, especially this range here. It needs to knock out that price action first. So yes. Let's see if we can. I want to see this as a turtle soup, preferably. Range of Q there. Let me check the risk here. 10 handles. That's not the candle I wanted to see though. It violated the discount fair value gap. Definitely not what I wanted to see. Yeah, what's up? Okay, buddy. Okay, I'll probably be streaming in the afternoon as well. We'll see. Yeah, cool, cool. See ya. Exactly. Would you usually allow yourself to take this kind of long low probably setup? What happened there? Sometimes I do, yes. Depends on the risk on the lower time frame though. But like most of the time, I don't do it because this kind of price action usually tests your patience. Especially when you're in a trade, you get tilted a lot because it's gonna go chop, right? Go sideways or back and forth too much. It tests your patience. So I try to avoid it usually. And then if you if you're like revenge trading or emotional trading, whenever you get stopped in a price action like this, you'll be looking at the most recent fair value gaps like these ones right there as a potential re-entry, which will burn your account. And for another thing is like if I execute in a position like this in the low probability conditions or high resistance liquidity runs, what I would like to do is I keep my risk to the minimum, right? Um, I would buy one contract tops or two tops, and I would take partials very quickly and move my stop loss also very quickly just to be safe. Because what will happen is on high resistance liquidity runs, you'll see too much back and forth action in premium to discount and discount to premium, then range equilibrium as well. And if you're not like buying low or selling high, you'll get stopped out. So in conditions like this, what matters the most is if you have a high probability drawn liquidity, the second most important thing is your entry, meaning your entry has to be at extremes of the ranges. Huge toll on mental capital, yes. I would have taken trades after 10 a.m. if I never watched yesterday's high resistance liquid run cases. Today definitely turned out to be one of those days best avoided. Yeah. Just because we had a price action like that in the morning at New York Open, price will require a lot of liquidity to get back up to the high because this high now it turned to be high resistance liquidity run after a sell off like that. Well, even though there's equal highs at the buy side here, equal high is not a high probability or low resistance liquidity run just because we have a range there. And that range was violated, right? Now we traded above it, which turned market into high resistance liquidity run condition. If this was to be a low resistance liquidity run, it should have stayed below that range when it come up there and then you would have seen a continuation lower. And that's how you avoid it. Like I waited for 10 a.m., right? And at 10 a.m., this candle here, it immediately violated or traded above that previous range before the sell-off. Once you see that, low probability conditions are in, or high resistance liquidity run is in. General question regarding market maker model entry after 50% of equal lows, please. You mean equilibrium probably. There's a type of that, I think. Correct me if I'm wrong. In relation to lower time frame market maker model DR execution and also higher time frame market maker DR dealing range in which lower time frame dealing range market maker model is nested, beside having the original consolidation or a clear higher time frame drawn liquidity is still available, or having an SMT at the start of the lower time frame smart money reversal between two assets. Which additional confluences would you usually like to see to validate a continuation in the lower time frame market maker model setup after crossing the 50% of the lower time frame dealing range and eventually off the 50% higher time frame market maker DR2, basically to add confluence that you are trading the higher time frame expansion leg and not a simple retracement. So, great question. The thing is, if you're trading the higher time frame expansion leg on the lower time frame market maker model, it is not going to respect the equilibrium. So it'll just rip through it. That's the most confluential signature in price. Then it'll probably like also can create a fair value gap at range equilibrium to use it later on. That also adds confluence. But regardless, when it comes to market maker models, whether you're trading lower time frame or higher time frame, you should be putting your stop loss at break even whenever it trades into range equilibrium. But for the sake of your question, this is an example here. So let me do this. So if you're in a buy model and if you're trading into a range equilibrium and if you see a price moving like that energetically, ripping through a range equilibrium, that usually means you're not in the pullback, but you are rather in the expansion leg. However, if it's the pullback, this is the price action you will see. Range equilibrium, wicking into that, and then selling off. If that makes sense. The good thing about market maker model is, and also like dealing range, when you combine the two, it'll tell you whether it's the pullback or not. That's the good thing about market maker models. Otherwise, you might be thinking like, oh, you're in the expansion leg, but in reality, it's not the expansion, it's the pullback. And I personally don't have any other way to understand whether it's the pullback or the not, or the expansion without using market maker model and the dealing range. Try to find an example for you. Let me do it this way. What's going on with my trading view today? Let's try to find an example here. So if you take a look at this price action, You have the SMR here, there's probably SMT divergence in this low, and you have the consolidation about at around this level, right? If you look at the short-term dealing range here, not the best example, but like it comes into equilibrium almost, right? And immediately reacts, so engulfs that down close candle, which is also the manipulation. And the dealing range from the market maker perspective is original consolidation to smart money reversal. The equilibrium of the range comes at that wick here. So this is the signature of, in the lower time frame, you'll see this pullback as an expansion, but in the market maker model perspective on the relative time frame, it is actually the pullback, and the bodies will tell you the story. It is going to respect the equilibrium of the range with the bodies and then keeps rallying higher to complete the market maker model. Which is why I like to be aware of market maker models dealing range instead of looking at the extremes like here. You're not going to see this clean. So say you shorted the pullback here, right? If you are seeing price respecting the equilibrium of the market maker model, you should collapse your trade or take partial stop at break even. Try to find another example just in case. Same deal here. Original consolidation here and there. So let's say this is your highest probability draw liquidity. This is your smart money reversal area. So market maker models dealing range is established now. And if you look at the dealing range, it's coming back into equilibrium. Now on the lower time frame, like I mentioned earlier, you're going to see this price action, this pullback in the form of a market maker sell model or something on the 1 minute, 5 minute or something like that. But on the higher time frame, it is actually the pullback. You could really do two things here. Like, if you're short selling there, you could either put your stop loss above the order block here or the swing high, just to be safe. Or you could just target the equilibrium of the range and close your trade after that. Let's get back to charts. We are still in the same range. There's nothing actionable here as of now. I think we sweep lows on ES and then rate all the way to the buy side equilibrium, equal highs for Nasdaq. Well, it seems like I honestly I don't know what ES is doing right now. Like, as long as this SMT or from earlier today is untapped, it should be good for the buy side. However, since we are in a bearish order flow, the likelihood of knocking out the sell side is more likely, in my opinion. Which is why I kept that level. Because it's also respecting the fair value gap. Look, it's all IFUD. Like, there's no body close. Like, maybe one body close, just slightly. But to me, that is a great signature for at least this sell side should be an easy target for ES. Nasdaq will follow, obviously. But after that, I don't know if ES could just keep going lower and lower. We'll see. Now 50-minute range is broken. SMT is faded almost. This type of lesson I would like to do ASAP. Advanced higher time frame to lower time frame market maker deal range regulations. Thanks for the reply. Sure. Your questions are fire. I love it. We could do what we could do is because you want to have a market maker model class, we maybe can do it in private. I don't know. I'll think about it and I'll let you know in general chat. Because like there are people in here, they're not like as advanced as everyone else, and I don't want to confuse them by showing like advanced stuff right away. If that makes sense. Man, it's tough price action. This looks like an FOMC Wednesday morning session. Like, it looks like it's waiting for FOMC news release to move. What a day. That's the classic issue. Yeah, because like the thing is, if you're not like familiar with the basic stuff or maybe like slightly more advanced stuff, jumping right into advanced stuff can make things confusing or like overcomplicating things. However, I'm like a huge advocate for keeping things simple. So I don't want to get people start overthinking about price action at the early stage of their journey. It's a really hard habit to break later on. Looking like a morning child and parent PM session delivery. Yep, that seems like the day for Tuesday. You're waiting for the monthly close, like you mentioned. Yeah, well, that's a fact, like a fact for me. I think like we're gonna be stuck in the daily range, in this daily range for a while. Probably like until next week. So my main framework is in this dealing range here. I believe that the main target for Nasdaq is the gap though. This low is the main target for Nasdaq, and it will come in the form of low resistance liquidity run. The question is if it's going to turtle soup this high and then starts the low resistance liquidity run. I think that's the more likely price action. Back in the range EQ. Let's see. Yes, it's still respecting this rejection block on the 1 minute. Look at this daily range here for yes. So the typical accumulation on the hourly. Generating liquidity above the highs and below the lows. Then fakes out and goes in the direction of drawing liquidity. Question is, when is it going to do that? That's the main deal here. And then we're going to have a SMT divergence at the highs here probably, which will trigger the short sells. Wonder if the price action is due to monthly close. Yeah, definitely. Because once the monthly closes, we're going to have a monthly fair value gap below the daily sell side, which kind of sets the stage beautifully. Because essentially, at the end of the day, I want to target that low here before anything else into an old fair value gap, maybe. These are the days that I feel very grateful for not executing anything. And I feel like that's the best trade. It was really hard for me in the first place to just sit through price action. But it comes with a lot of backtesting and tape reading, live trading. So it comes over time. It's not an easy thing to do. Also, guys, I if you're not journaling, start journaling your trades and the price action. And I think I forgot to mention this yesterday. What I want you to do in your journals is basically, whenever we are in a high resistance liquidity run condition, I want you guys to journal how many times it's going back and forth between premium and discount. Put that down in your journal in the form of a note or something. Wonder if they're engineering this. Yeah, that's the thing I was talking about earlier here. Too much liquidity here, too much liquidity here. One side will be taken out first, and that will be the manipulation. Thinking about maybe like this rejection block could be the manipulation. But they do it when I'm knee deep in the work, you know. The thing is, dude, like, it doesn't matter if you miss moves like that. Because you gotta know it'll be there tomorrow, right? Or the day after, or a week later. You'll be able to execute those trades. So the SMT is gone now. It's violated. We have an SMT on 5. In any long scenario here, I would rather wait for ES to attack the south side and turtle soup that area. Takes a few years to be good at it. I'm only 5 months trading Nasdaq, dude. You're in the right place. If you have experience trading options or crypto before migrating to futures, index futures, you're gonna love it. You'll see it's actually cleaner, much cleaner than other assets. Crypto's the worst, yep. It was good before, I think 2020. When I was trading crypto, it was actually good. It was not consolidating as much back in the day. Let me pull the weekly. Yeah, like this price action right there from 2021 to hold on, July to November there. I was mainly trading crypto back then. And that price action was actually very fast and good. No consolidations at all. Bitcoin is fun if you have the capital, you know. It's like a it's like a casino for rich folks to, you know, have fun with the markets. I feel like I'm gonna call it for this morning session and come back at like 1:30 or something. Well, before closing it up for the morning session, this is what I want to see. I just mentioned that and be clear about it. I want to see ES taking the sell side and using that liquidity for, like, as a turtle soup to run the highs. Same deal on Nasdaq. While ES is taking the sell side there, I want to see Nasdaq trading like maybe within here in this fair value gap and not attacking the sell side, which will create an SMT divergence at the lows. That might set the stage for the afternoon session. So far, that's the thing I want to see from indices. Let's set alert here, and I'll be back in like at around 1:30. I'll be live streaming the afternoon session. Hopefully we'll get something, and hopefully we'll get volatility. So as always, thanks for tuning in, guys. Have a great rest of your day. If you can't watch the afternoon session, it will be recorded. You can watch it later. I'll talk to you soon.